Happy Monday, friends. Okay, so I'm also going to talk about the Fed's announcement last week and the impact that it had, but from a little different angle. So, if you recall, after the last Fed meeting, when Jay Powell got up and said he was going to remain hawkish, and yet the markets didn't respond the way they should have with a hawkish response, right? And in that video, I talked about that the markets weren't buying it, that the markets were trusting that he was going to lower rates, even though he was saying he wasn't going to. Well, this week we proved that we were right. And he did. He said, we're going to, now all of a sudden he's dovish, saying, well, things are turning around. We're going to start lowering rates. And Greg talked about the reasons why that might be. And it's a great study in philosophy. But what I'm going to talk about is what we saw in the aftermath from that. We saw the stock market go up a little bit, and then we saw gold and silver go up a lot, right? Gold went up over 3%, and silver went up almost 7% in a day. So why did that happen? Why did the stock market go up and the metals go up even more? Well, they both went up, but for two different reasons. The stock market went up because the market believes that lower interest rates are going to be a good thing for consumers because businesses will start to borrow money again and deploy those funds in their businesses. Consumers will start borrowing money and buy homes and cars and spend on their credit cards more, right? And so it did have a positive impact on the stock market, but it just went up a little bit. Meanwhile, why did gold go up? Well, if you remember, gold and the US dollar are the two tier 1 assets for the world. Except that gold doesn't do anything. It just sits there and holds wealth. Meanwhile, what does the dollar do? The dollar continues to devalue itself through inflation, but it offsets that with interest rates. So the interest rates are, when interest rates go up, all of a sudden it becomes a little more enticing than gold. Well, when the interest rates go down, then what else you got? Gold. That's the thing. It's the solid that you can trust. Meanwhile, there's the currency concerns. And Greg talked about this actually, how maybe one of the reasons Powell is pivoting, and let's review that. That is a 180-degree pivot, right? It's not like he just altered course a little bit. He's gone foosh, completely different from where he said he was going to go. But it may have to do with the U.S. debt, which is becoming insurmountable. And if that's the case, then that's when investors start to lean on the dollar in any type of currency crisis. So we trust that you liked the results you saw last week, and we think that we'll see more of that this next year, although we'll probably see some choppy waters in the meantime. So just hang in there, and we appreciate your business and your trust, and have a great week.